I'm spokeswoman April Pan from CDF. First of all, welcome all of you to join CDF's first half performance review investors conference. And there are 6 parts of today's meeting. First of all, we will invite the CEO, Steve Bertamini, to talk about the performance highlight in the first half and ABCD strategy update and achievements. In subsidiaries, ABCDE updates and performance updates will be talked about by the CEOs from the subsidiaries. The third part is ESG. We have been dedicated to ESG. We will talk about the progress in ESG. And next, there will be a financial overview covered by our Chief Financial Officer, Jenny Huang. She will talk about the performance in the first half of CDF. Next, the CEOs or representatives from the subsidiaries will talk about each subsidiary's performances. The last session is QA. It's the same as the last investor conference. You can raise your questions via WebEx. There are 2 parts of the QA. The first part will invite the analysts and corporate investors to raise questions. The second part will welcome the questions from all the medias. Before we invite Steve to speak out, we would like to remind you, you can select the left button for translation if required. And now we will invite Steve to talk about the performance of the company.
Hello everyone. I'd like to begin by giving you a brief update of our second half financial performance. CDF delivered $13.6 billion in profit, which actually increased to 16.8 as of the end of July. We also approved our long-term funding through the board in order to facilitate our long-term strategic development and also to further improve the financial structure of the company. We also made very good progress on our ESG initiative, and there'll be a brief update on that in a few moments. In terms of China Life, strong income of $13.5 billion, and they continue to focus on their high-value strategy. Our VNB margin year-on-year improved from 25.6% to 35.9%. And also on the investment side, our pre-hedging recurring yield improved by 17 basis points, and new money yield from overseas has also improved over 50 basis points since the first quarter of this year. KGI Bank had a very strong performance. Net income was up 27% year-on-year to $2.9 billion. We maintained superior NIMs of 1.43 and continued strong growth in both personal loans and SME of 19% and 21%. Our consumer finance JV in China also continues to do very well, and balances grew by 64% since the end of last year. CIB Capital results were a bit more challenging, but in July we saw that loss reduced by $600 million. CDIB also established a foothold in Tokyo to help us develop better opportunities for startups between Taiwan and Japan. And also they saw an increase in AUM up to $49.2 billion. KGI Securities had net income of $2.1 with an ROE of 6.9%. And they also managed to maintain the leading position in ECM and DCM. We also launched our first equity ETF through KGI Site. And we have a new cooperation with Changhua Post in terms of co-branding and account opening. Before I provide a brief update on our strategy, I wanted to briefly address the decrease in net worth, which has also impacted our DLR ratio. As I think you're familiar, the recent market fluctuations has had an impact on the portfolio. However, this is an industry-wide issue, which is really exacerbated by the current accounting treatment. If we were to adjust for IFRS 17, when that comes into place, we would see largely this difference eliminated. Also, most recently, we had our long-term ratings reaffirmed by Taiwan Ratings, a AA-, also for China Life, And also Fitch, which is a new rating agency, also rated us A in terms of international and also AA plus in terms of Taiwan. So again, I want to emphasize this is a short-term issue which will be corrected. The long-term increase in rates is a positive for financial services industries such as ours, and we continue to manage the business in the correct and prudent way for long-term value creation. In terms of the strategy update, I'm only going to make a few brief comments because today you're going to hear from the presidents on respective progress in their areas. The main area we've been focusing our energy on in digital is on continuing to build our partnerships and alliances for the ecosystem. We've done a lot of work to refine how we want to play, what technology we need to work with, and have started discussions with multiple partners. In terms of employer of choice, we've also made a lot of progress this first half of the year. We've seen very high activation rate in terms of our online offerings with over 80% of our employees signing up. We've also done a lot of soft skills training to over 500 staff, and we've had over 200 people attend leadership development courses. We also continue to enhance our employee value proposition. We recently rolled out a new employee trust program with 80% of the people signing up. We've also improved our EAP program and also most recently changed our dress code, which seems to have been very well received. In terms of customer focus, we continue to work on NPS. During the first half of this year, we now enabled not only our website but also our mobile and call center channels. We formed dedicated teams, and we're beginning to see improvements in our scores in all subsidiaries. In terms of driving growth, we continue to work on developing machine learning models to enhance our response rates and also working with the subsidiaries to improve the customer experience. As I think you've seen, we continue to improve margins, particularly in China Life as well as the bank, and we will continue to focus on the other business units as well to see further improvements in ROE. On the execution excellence side, there's a lot of work occurring on our IT systems. We're committed to moving to a hybrid cloud environment and are working with our teams and our partners to enable APIs. And in terms of optimizing our investment and risk appetite, we now have better tools in place that allow us not only to monitor our portfolio and investment positions across our businesses, but also to run more sophisticated scenario analysis, which will enable us to make better decisions both in terms of the short and longer term position of our company. I'd now like to hand over to Stephanie, who's going to give you an update on our progress in China Life.
I'm Stephanie Huang. I will talk about the strategy initiatives of China Life. Please look at page 8. Echoing the ABCD strategies of our group, we also have our initiatives. In the first half, there are 3 key achievements. First of all, in the drive growth, China Life dedicated on high-value product promotion. In the first half, the FYP achieved 9.2 billion with an annual growth of 60%, and the market share reached 12%. We also improved our market ranking from number 5 to number 3 this year. And secondly, in E, execution excellence, Steve also mentioned for an insurance company, a stable financial performance is a pillar of an insurance company. In the first half, the Fitch International gave a and AA plus rating for the domestic insurer category. And third, customer-centric has always been the core of China Life. We continue to innovate for the interest of our customers. We have been received the award of treating customer fairly for the 4 consecutive years. Next, I'll hand over to KGIB Amy Cao. Thank you, Stephanie. Hello, everyone. I'm Amy Cao from KGIB. I would like to share the strategic initiatives in 2022 first half. In Accelerate Digital, we have great improvements. In June, we have launched e-signature in account opening at branch. I believe you have the experience when you visit a branch. If you want to open an account, you need to sign a lot of paper and forms. In KGIB, we've tried to reduce the paper for the past 2 years, and this year we've launched e-signature for account opening. It doesn't matter for teller at the branch or for the employees in the back office. It can save a lot of time for our employees. And since it's an e-signature, it also helps to improve customer experience and save the working time of 53%. And this launch helped us to achieve multiple purposes, and will continue to allow our employees to identify process simplification from the perspective of customers. And secondly, I would like to talk about execution excellence. In addition to leverage digital tools to do the pricing for our businesses, we've received the best risk tour application award. This is due to the frequent use of credit card with the growth of frequent fraud. We are the first company to introduce the Visa fraud database to help us to prevent fraud and improve the transaction approval within the manageable risk. In the second half, we will continue to work with MasterCard and to complete the protection of our customer. And thirdly, our performance, our NIM increased, contributed from our corporate and individual and SME loans, and also the contribution from suing KGI. The income from suing KGI beat our expectation. And that is our highlight from the first half performance. Next, I'll hand over to Melanie Nan from CDIB. Good afternoon, everyone. I'm Melanie Nan. The ABCD strategy update from CDIB. First of all, in Accelerate Digital, we introduce our customers to join the ecosystem. In Drive Growth, we help the group to complete deals by the amount of 2.7 billion and the cash dividend upstream by 8 billion. We also collaborated with Line, and we also built a foothold in Tokyo. And we added value to the investors and create a ecosystem in Japan. And ESG is one of our key in 2022. We plan to work with the industry and help our investment to transform with the direction of ESG. And that is our summary of 2022.
Good afternoon. I'm Greta Liao from KGIS. I will speak on the 5 strategy and their initiatives and their updates. In terms of Accelerate Digital, KGIS has a collaboration with Chunghwa Post. We had a co-branding campaign with them. We have a 3-in-1 account opening collaborating with Chunghwa Post, providing the customer with various financial products as well as a streamlined process for them to sign up. We've also rolled out the video conference service for trading limit adjustment. Previously, if you want to adjust your trading limits, you need to go to the branch. However, we use innovative ways and as well as leveraging technology, allowing our customers to use the application on their cell phone, and they can verify via video conferencing to adjust their limits. In terms of becoming the employer of choice, we have implemented a new expense system offering web and mobile filings, and that is in accordance with the post-pandemic era's requirement. We are also living up with the spirit of ESG. In terms of customer-centric, KGIS launched the Enriching Your Life campaign. We provided delicate services to our customers. And we have also launched a US stock buying shopping chart for the customer, and this has also shown their results in our growth. And the NPS has also grown from 21 to 55 out of our efforts. In terms of drive growth, we continue to maintain our market share as number 1 in ECM market. And we also achieve green financing amounts at above 47 billion. Our innovative team continuously to provide customer with best service as well as bringing a return to our shareholders. Now I will talk about the ESG updates for CDF. Please refer to page 13. CDF values sustainable development, and we have built up relevant management policies in accordance with the international trend. Our efforts in ESG has also been recognized by the international institutions, as we are chosen as in the DJSI indexes. We have been thinking on yielding our influence as a financial provider. We could incorporate sustainable management in our investment and financing, increasing our engagement with the customer in order to reduce climate change impacts. And in April this year, we joined the SBTI initiative. We use science-based tools and methods to have a carbon reduction plan phase by phase, and to take care of the net zero transformation as well as the business development in our company. And in May this year, we have been ranked by Financial Times and Nikkei as the number 9th in the Asia Pacific climate leaders. And here is a timeline for our carbon reduction plan. We are the first company to commit net zero by 2025 in Taiwan, and the goal is to increase 15% of green financing, green investment in 2023, and to reduce 25 and 50% of carbon emission in our portfolio by 2025 and 2030. And in 2021, we have established a very clear decarbonizational strategy. We will gradually phase out the investment and financing in the thermal coal mining and unconventional oil and gas industry. We also use the SBTI methods to incorporate our decarbonization efforts. All of our subsidiaries have also incorporated ESG in their core business to implement sustainable development. For example, China Life maintained a stable investment and embedded responsible investment principle in their processes. Through different efforts and through the engagement with the different industry, China Life became the first enterprise in the world to receive the ISO 14097 certificate. China Life's green bond investment balance has amounted to 24.5 billion. As for KGIS, KGIS continued to roll out its green financing and deposit business, and the balance on green technology lending has grown 27%. And as for CDIB, as a professional in venture and asset management, it continues to seek new energy and circular economy investment related opportunities. As for KGIS, as the leader in ECM and DCM, they also actively partake in the ESG and green relevant businesses. And the fundraising amount by June has already reached 47 billion. And now I'll hand over to Jenny Huang, our CFO, to talk about the financial overview. Now I'll talk about the overview of our first half. Our net income is 13.5 billion, contributed from China Life, KGIB, and CDIB, and KGIS. The charts in the lower part shows you the comparison of last year and this year's income. KGIS grew 27%, and China Life grew 4.4 billion. And since we now recognize China Life as a 100% owned subsidiary, this number has varied. In terms of KGIB grew quite significantly. Therefore, CDF has recognized about 600 million of investment income from KGIB. CDIB is seeing a decline, and KGIS is also seeing decline due to the market volatility. And in page 18 is our total assets is 3.4 billion, and in loans we have grown 3%. In terms of deposits, because of the rate hike as well as the tightening of capital in the market, there has been a 4% decrease. However, in July we are seeing the recovery in deposits. In terms of provision, it has grown 6.6%, and this amount has grown up to 2.0 trillion. In the charts in page 19, comparing to last year, our total assets declined by 36%. Therefore, our leverage ratio has grown from 11.8% to 18.6%. In the first half's ROE is 11.4%. And comparing to last year's whole year's ROAE is 14.1%. Moving on to the capitalization. This chart shows the capital adequacy ratio of our subsidiaries are very stable. The capital in our subsidiary are very sufficient. The double leverage ratio has grown to 130% in the first half of the year. This is because CDF has recognized the unrealized loss from China Life, and the net worth decrease has its very particular reason, as our CEO has mentioned. As for the unrealized loss, it is actually a fluctuating amount. In fact, in July, this number has gone up by 10 billion. If we exclude the impact from the unrealized loss, then the DLR ratio is below 125%. And that's the financial update from me. And now I will invite Stephanie Huang, CEO of China Life, to talk about their performance review. Now I will talk about the first half 2022 performance. Please refer to page 22. In terms of profitability in the first half of the year, due to the Russian-Ukraine war, the pandemic, and the rate hike, as well as the concern for economic recession, there has been great fluctuation and correction in the markets. Therefore, in our asset valuation, we are seeing a decline. In the end of June, our net worth is 89.1%. However, it has gone up to 100 billion by July. The net income in first half is 13.5 billion, though there has been a decrease. However, this is still a high amount historically speaking. The FYP of China Life is 38.9 billion. There has been a 18% decrease. However, through the selling of high value products, if we look at the FYP, the top 6 life insurers in Taiwan are seeing a 3% decrease in average. However, China Life has seen a growth of 16%. In terms of FYP distribution channel, all of our channels are working smoothly. In our bank assurance channel, we are able to obtain 4 billion out of the bank assurance business. There has been a 81% increase compared to last year, and we are continuing to take up the first as market share in terms of market share. And as for operational performance, although the FYP for the first half has slightly decreased, however, through the optimization of our product mix, our VNB has grown up to 10.5 billion. There has been a slight increase compared to last year. As for the VNB margin, it has also grown from 25.6% to 35.9%. In terms of assets and liabilities, our investment spread has gone up to 4.79%, and our cost of liability is at 2.98%. The spread is continuously to widen. And we are also ranked among the peers, has the lowest cost of liabilities. China Life paid great attention to ALM, asset and liability management. We continue to stabilize our income. We have most of the allocation in fixed income. We also continuously to aim overseas high yield returning overseas fixed income. Moving on, through very prudent structure, we are able to maintain yield. In the first half of the year, our recurring yield is at 3.47%. There has been a 17 bips increase. In terms of hedging structure and hedging cost, with prudent management in the first half of the year, due to the rate rise in US dollar, our cost of hedge has decreased by 0.5%. And our FX reserve balance has gone up to 9.42 billion. Now I'll hand over to KGIB's Amy.
Okay, I will talk about the profitability of KGIB first. In this page, you can see the first half, our annual growth is 27% compared with the same period last year. Our net income grows by 14%. It's not only contributed by interest market, but also contributed from loan growth. And I will also like to highlight in fee income. In the upper left chart, our fee income grew by 5%. Even though the market was unstable in the first half, but starting from July, we've seen the rebound in wealth management businesses. And the first half growth contribution mainly comes from loan and fee. We have enjoyed the annual growth by 43%. And in this page, for the spread and net interest income have been covered. I will not talk about them here. Our asset quality is also stable. Please go to page 29. In the upper part, regarding our loan, we keep the pace from last year. We would like to deepen our relationship with large corporations, not only in deposit and loan. As for SME, we would also like to target a double-digit growth. For personal loan, we would like to further expand and also work on financial inclusion. Even though this year's market is very challenging, but we will continue to find a balance between risk and income, and we hope we can deliver an outstanding performance in the second half. And next, I'll hand over to CDIB. Please go to page 31. From the upper left chart, due to the volatility of the asset market, and we suffered a loss of 1.8 billion, and mainly come from the unrealized loss of our investment. In July, this loss has been narrowed, but the mark-to-market value still depends on the market performance. Fortunately, the total asset quality is still better than the market average. As for the lower right chart, the total equity dropped by 9.1 billion, and due to the cash upstream of 8 billion to CDF, our asset management performance in the first half, our AUM grew from 47 billion to 49 billion this year. In the USD denominated bond, it will focus on the team led by Taiwan, and our this year's strategy, including expanding our investment in ESG and sustainability industries. We will continue to deepen the partnership with different industries. In the bottom half, in the first half 2021, our investment positions remains flat. It reflects the strategy in recent years. Our investment growth is mainly come from our asset management businesses. For our own investment is linked with our core businesses. As for the investment locations, is mainly focused on the Taiwanese businesses in Taiwan and Asia. That's our financial performance highlights. Next, I'll hand over to KGIS. Please go to page 34. The first half 2022 performance of KGIS, please look at the left chart. Our net income is 2.1 billion. Compared with the same period last year, slightly dropped. One of the reasons is in 2021 we have completed the share swap of China Life. We didn't recognize any of the income from China Life, and the difference is about 7%. And secondly, due to last year the market was very hot, and this year due to the conflict in Ukraine and Russia and rate hike and the outbreak of COVID-19 in Taiwan, the market trading volume dropped, and our position performance is also weak. On the upper right, our overseas subsidiaries is also impacted. Their share is only accounted for 3.5%. Compared with the industry average, the darker green is KGIS and the lighter green is the industry average. Due to a weak market performance, the ROAE has a declining trend. On the center, our first half ROAE is 6.9% and is higher than the industry average. On the right bottom, our customer AUM is 326 billion and slightly dropped 7% compared with the same period last year, and is mainly due to the balance from KGI side. And next page, please look at the upper left. The 2022 net revenue is 2.7 billion and dropped by 46%. On the right hand side, the net revenue mix is 6.1 billion and dropped by 40%. From the net revenue mix, it's due to the volatility in the market. The net revenue decreased, and the brokerage commission increased, and the underwriting fees is also stable. The investment income is impacted by the market and it is dropping. On the lower charts are the comparison with last year. The net revenue is impacted by the market performance, and the fee income is still outperforming the industry average. And that's all from KGIS. Thank you for your sharing. Now we'll move to Q&A session. First, we'll invite the analysts and corporate shareholders to raise your questions. And you can wave your hand on WebEx, and we will invite you to ask your question one by one. Okay, first, we've seen the first one is Jamie Huang from JP Morgan. And Jamie, you can speak now. You are unmuted. You need to accept unmute. Hi everyone, can you hear me? Yes. I have 3 questions. First, we are focused on the capital, but the management all talk about if we use IFRS 17, the double leverage ratio is acceptable. So can we see it like this? If the double leverage ratio exceeding the requirement from the regulator is due to the unrealized market-to-market value from bonds, and the RBC of China Life is still sufficient, and this will not push the company to do the fundraising. Can we interpret it like this? If the double leverage ratio exceeding 125% is not a long-term situation, in the future, do you have any plan to lower the double leverage ratio, or maybe in next year the dividend payout ratio needs to be adjusted to lower the double leverage ratio? That's my first question. The second question is regarding China Life. Can you tell me, in the unrealized losses in the second quarter is about 70 billion. How many contributed from equity and how many of them are contributed from bonds? In the investment income annualized is still in a growth trend. How can we interpret the profit structure? Is it due to the underwriting? You have a higher commission income, or in claim is increasing to cause the profit decline? And the last question, how should we see the NIM in bank and the recurring yield outlook in insurance? The original guidance, the NIM was above 1.4%, but the first half already exceeding the number. Do you have a concrete target? And the recurring yield was 5 to 10 basis year-on-year improvement. Do you have any adjustment? Are there any upside potential?
Yeah, thank you for your question. I'll go ahead and answer the one on capital, and then I'll ask China Life to comment on the remaining two. In terms of our current position on DLR, as I mentioned, we see this as a short-term issue. We don't feel pressure to raise capital at this time. We believe when we do raise capital, which, as you know, was approved by the board, 2.5 million shares, billion shares, we will do so. We are continuing to actively look for opportunities that are inorganic in nature. And obviously, we also want to continue to strengthen the financial base of the company. As Jenny mentioned during her presentation, the leverage ratios in all the subsidiaries remain very strong. They all still have plenty of capital to grow, and also our long-term ratings have been reaffirmed. So, we're comfortable where we are, but we'll continue to monitor it closely. And both the regulator and the industry recognize that this is an issue that's really impacted by the rising interest rate trends and the market volatility. In terms of China Life, portfolio mix, etc., I'll let the China Life team answer this question.
I will answer the questions regarding China Life. In the first half, the URCG is about 75 billion, and 30% of them come from equity. And you mentioned about, is it related to underwriting commission fee? Our view is it is due to RCG declining and also hurt our profit, and that is our reply. I'm Amy Cao from KGIB. Regarding the NIM forecast in the second half, you asked that in the first half our guidance was to maintain about 1.4%, and now we've reached 1.43%. Looking in the future, the market situation is not clear yet. Doesn't matter the interest market in the US dollar or Chinese dollar, the US dollar interest rate reverted. The short-term interest rate increased very fast, and our capital cost is under pressure. The pressure is, if we want to improve our NIM, it will be more challenging, but we're still optimistic in the second half. And how much we can achieve above 1.4%, I cannot make any promises, but we will try our best. 1.43 will be the minimum, and we will try to improve.
Jenny also asked about the recurring yield guidance for China Life. We are in the opinion that comparing to last year, this year, we will see at least a 15 bips increase. Thank you. Okay, thank you very much. This is the time for question and answer. If you want to ask question, please raise your hands using the WebEx function. Okay, now we see Tina from Capital site. Please go ahead. Can you hear me? Yes. I have two questions. First, I would like to ask KGIB, as we see that there is a year-on-year increase for KGIB's performance. Can you explain the reason? And secondly, I want to ask about your dividend policy. Currently, there is a URCG issue for China Life. There has been unrealized loss. Would it affect your payout ratio in next year? That's the two questions that I have.
Okay, so I'll have Amy answer the first question for the bank.
To answer your question, with the upheaval in the financial markets, the situation is actually not as good. But as I explained earlier, we have seen growth in our loans and the fees for loans. In the first half of the year, you see that actually our 2022 financial assets actually grown from compared to last year. But if we look back, actually in last March, there has been a movement in our interest rates. So at that time, a lot of our FIs have seen a big mark-to-market loss. And also this year, a lot of the public company and their dividend payout has actually moved ahead of their schedule. And most of the dividend payout will be done in July and August. However, this year, a lot of them are issuing their dividends earlier. I think that is the main reason of us seeing growth.
In terms of the dividend, as I think you're aware, financial holding companies, particularly with large financial subsidiaries, are facing a similar issue in terms of the impact on net worth. I think at this stage it's still early to make any comments on the dividend for next year. Obviously, this is subject to the AGM. It's also subject to any regulatory approvals that are required. So we'll continue to monitor this closely. Our policy hasn't changed. Obviously, we want to continue to share and distribute dividends to our shareholders as we did last year. But it's a bit early for us to determine what the final outcome is going to be, particularly given the volatility that we've seen in the markets over the last 3 to 4 months.
Our third question is from Peggy Shi of Morgan Stanley. Can you hear me now? Yes, please go ahead. I have two questions. The first for China Life, the cost of liability. China Life is doing better than the peers. However, this year, the popular product is the interest-sensitive US dollar products. And since the US dollar is on the rise, I want to know that how will your cost of liability trend be in terms of the rate rising environment? And secondly, the question is for KGIS. Since KGIS hasn't recognized China Life's income, in terms of brokerage fee or interest income, you have actually been impacted by the decrease of margin loan. So I want to know how is the ADT and margin loan outlook from KGIS? Let me answer the first question about the cost of liability of China Life. You are right, because the market the popular product in the markets is the interest-sensitive products. And in terms of the rates being announced, our team will factor in all the indicators to make adjustments for interest-sensitive products. But overall speaking, we believe the impact wouldn't be so big to our cost of liability. Thank you. Okay, in terms of KGIS question on the outlook for ADT, yeah, indeed, last year our trading volume has been cut greatly. As for our outlook, we believe that the adjustment will last all the way to the first half of 2023. Therefore, in terms of trading volume, we still have maintained a conservative stance. And in terms of transaction, we are also being cautious and conservative. Although we believe that in the short term there are volatilities or recovery or rebound, however, we believe overall speaking the correction will last all the way until next quarter, the first quarter of next year. Okay, thank you. If there is any questions, and please click on the raise your hand button in WebEx. Thank you. Next we will move on for the Q&A session for the media. Again, please raise your hand to tell us that you want to ask question, and Mandy will ask you and unmute you. So far, we haven't seen questions from the media. Thank you for raising the questions today, and that's marks the end of our. I'm sorry, I think we see a question from our friends in the media. We will invite Ms. Sha to speak. Can you hear me? Yes, please. I have a question for KGIS. Previously, it was announced that your CEO, William Pham, has been suspended from his duty, but we haven't heard from any of the announcement about his deputy. Is Ms. Greta Liao the deputy from William?
I'll answer that question. We're in the process of obtaining regulatory approval for the interim president. We expect to have that very shortly. So as soon as that occurs, we will make an official announcement. Greta is the CFO of the group for KGI Securities.
Are there any more questions? Okay. Let me officially close today's investor conference. Later, we will upload the audio file of today's conference to the investor relationships section in our official website. You can download and listen to the file, and if you have any more questions, you're welcome to call or email us. And lastly, I want to thank you again for your participation, and I wish you a good Happy Moon Festival. Thank you.